Good morning, SMF MMTs. Welcome to the pre-market. It is 3/8/2011. Time is 5:57 a.m. Pacific Standard Time. What we are looking at is on the NASDAQ gap open down. Netflix left elbow. Bill said that there was something related to Facebook about doing online videos. That's got that big gap down on the bulls. We'll look how to trade off that bottom, 36912. If it's a knife hook and it runs hard off of that IR, stay the course until it finally weakens up. On the other hand, over here, the over-bloated restaurateur Chipotle Mexican Grill closes at 252. Heavily shorted both names. Not only that, that left elbow, called the left elbow dollar price gap down, is a trade every time. Why? Because the market makers will walk it that way. So Apple, here's the gap down list. It's not real heavy, but here are some culprits. GOLD, CASY, Urban Outfitters guided down, folks. Any move up off of the bottom, it'll be a rollover. Let me get out my horn. Beethoven. So, that one's in earnings. That one's a headline there. Now, on the other hand, let's go to the gap open list. And let's see what we have in a gap open. And let's take a look and see who's being rewarded. So that what you would do in the gap up list is you're going to take a look at why you would short the pullback, but then on the opposite hand, on the gap up list, the power of this list is that the pullbacks, when they do pull back, that they're going to be strong. So here we go. We got BSFT up 6.48, ATRN, ECOL, JAZZ out of India, InfoSystems up $1.30. All right, VRUS up $1.05, CME. So as far as the gap open list is that's what we have here. Okay, these names are names to be looked at on the pullbacks because in your platform they pull back, they remain elevated, then they bounce higher again because there is a gap sequence. But what do we always look at doing on these gaps or artificial price movement is shorting them on that pullback and then coming out and going long again right away. Okay, let's go to the NYSE and let's see what we can do there. Here we go. That CEO is a gap up on these are all NYSE stocks, New York Stock Exchange. PTR 3.49 gap ratio, CEO 2.10 ratio, S&P 2.0 ratio. Dick's Sporting Goods, on the other hand, is faring better than what? Urban Outfitters. So basically, this is the diminishing gap. There's not a long list, as we always point out. Let's take a look at the gap open down, and let's see if there's any bad news. Whoa, CMG 7.58, that's this one here. SI 2.21, PAA 1.78, HIT $1.77, SAP $1.73, NVO, RIO, RIO, ICE. This is your gap down list on the NYSE. Okay, so basically the lower end, the short sellers on Chipotle and the short sellers on Netflix, when they do put their bottom in, you're going to have a nice move. And they average about $3 off the lows, just like we did yesterday. So basically, the S&P 500 futures are flat, and Best Buy files for a debt security show. Oh, imagine that, BBY. All right, on the wires, there's, so-so on the wires. But the gap up and the gap down list is also in your emails. HTCH down 11.3%. FISI down 4.4%. These are all headlines related. Today, analyst comments LDK, that's a solar, it was downgraded to a sell from neutral at Collins Stewart. Okay? And that's that Chinese solar stock that we were in some time ago, but it doesn't matter. The matters is that there's a sell rating. Qualcomm was downgraded to market peer perform from outperform at BMO Capital this morning. The Asian markets, the Nikkei down plus 0.2%, Hang Seng up 1.7%, the Shanghai plus 0.1%, the Sensex plus 1.2%. Japan is doing their thing. Hong Kong, the Hang Seng finished up because they were all down. The Shanghai Composite and India also in the telecom plus 2.9% and the IT 0.18%. And so that's what's going on around the world. As far as what's moving is that you've got Rio, BHP Hilton, and these type of stocks on the NYSE that are extremely overbought. They need a correction. What else could we say that could be helpful? Would be the list for the floor talk. The oil situation, which I've already updated everyone on this morning. On the other hand, this BSFT is 20% after beating on the top and bottom line and issuing upside guidance. That's your news on that BSFT. Okay? So that means that it's getting an earnings gap, but it will be shortable for the pullback. Okay? Off of the highs when it puts it in. And that's the news there as far as that one goes. U.S. corporate news, AEO shares spiked. I believe that's American Eagle Outfit. No, that's a... take a look at that one. I believe it's in the golden miners. I could be wrong. But it spiked late in the day yesterday on reports that the company was searching for a new CEO. So there's your AEO. Has been speculated to be M&A candidate in the past, which it has. So that's what's going on there. And that's what's going on with the BSFT. So the futures are flat. They're down slightly. They've been in positive territory. The indexes remain weak from the original trend reversal that happened. Today is going to be day 2 of the 3rd week of that original reversal that we called for. And basically, when the indexes could not hold the upside delta to the downside delta and it rolled over again, and there was a sell-off on Friday and Monday. That's called a continuation pattern of these sells. You hear me? So basically, what we're going to be looking for is where the bottom gets put in, but then when they do bounce in your platform, is it has to thrombone. What does that mean? That once they bounce, the higher elevation in the brain, the platform readings need to stay elevated. Meaning that you don't want it to come down and hit 0 and then pop to 15 and then roll over, or go up to 25 and roll over. Sure, they're very quick trades for a profit, and that's all they're going to give. That's exactly what they did yesterday. That's exactly what they did Friday. The indexes have not put the lows in for a true reversal at this point. And as I've been teaching all of seniors again, and the new MMTs, is there is a sequential events that take place at these bottoms. The thing about it is that the indexes remain weak. Stocks will not be able to hold their highs when they're put in. They will roll over Beethoven. The brain will confirm it. Why? Because I can tell you why. When the indexes are not healthy, in price volatility, equities cannot hold their intraday highs, nor will they. They just simply aren't going to do that. So basically what we're looking for today and each and every morning is that equities seem to hit that bottom, but they got to have that knife hook low. And that's the power of the pre-market this morning. We remain in that trend. And as a market maker, that trend belongs to the public. That does not belong to an MMT. You're the referee and making a market between the market maker on the floor of the exchanges, and that's who you are being trained, versus the public model. And you know how destructive that the public model is. Let's get ready to rumble. Let's make sure that the teenies are done. Check your prop reports. And look, we will put senior traders on some of these listed stocks. They've had a number of years of training on these, and then they trade these. These are a little bit different than your high beta NASDAQ stocks, 4-digit symbols versus 3. So, once again, we're going to be watching everything very carefully as to that knife hook low. And when it comes, you do that 369 up, and you might pull back a 3 bar, but you will remain elevated. And not only that, in the platform, you're looking for the teeny expansion consolidation price action, and that it holds and they break higher, and that you stay elevated in the platform. You will have that success, as the success is here every single day. And this is your wages. Your expertise and training gives you the opportunity to do far better than anyone else out here. Period.